Hello, welcome from Trend Signal for our review of the data and events of the week beginning the 15th of June. Another busy week coming up this week in terms of central bank announcements and inflation data, etc. Let's just have a quick review of last week. Stocks ended unchanged in a relatively choppy week. The Greek situation dominates as it does first thing on Monday morning in this new week. However, the DAX, FTSE and the Dow and S&P all finished sort of unchanged to slightly higher on the week last week, but giving up a lot of those gains on Friday. The dollar was quite choppy with various remarks from central bankers pushing the currency back and forth, but in the end the euro ended up quite a bit higher on the week last week, about 150 odd points. Cable nearly 3 cents higher in a considerable recovery. The yen also recovering against the dollar after comments from Kuroda, the governor of the Bank of Japan, suggesting that he didn't think that the currency would weaken any further. Gold and Brent crude modestly higher. Brent crude recovering from some of the sliding that it did at the previous week following the OPEC meeting. But again, overnight news dominated by Greece. Greece has got until the end of June to pay 1.3 billion owing to the IMF, and it's highly likely that our news will be dominated by Greece right up until they eventually strike a deal, fudge it, or simply refuse to pay, and effectively ending up in a default situation. A last-minute meeting scheduled for Sunday that's just gone between Greece and its creditors lasted less than an hour. A new economic reform proposal was submitted by Athens, which was deemed inadequate to continue negotiations, and so the meeting ended, which means there's very little time left for Greece and the Troika to agree on anything ahead of the Eurozone finance ministers meeting this Thursday. An article in the Financial Times almost appears to support the Greek position to the extent that if Greece had to agree to the Troika's demands, it would suffer a further significant fall in its output. In summary, and I quote, the cumulative hit on the level of GDP of 12.6% over 4 years, the Greek debt to GDP ratio would start approaching 200%. This is my conclusion, that's the conclusion of Wolfgang Münchau, the FT, is that the acceptance of the Troika's program would constitute a dual suicide for the Greek economy and for the political career of the Greek Prime Minister. So there you have it. Markets have reacted negatively to the news, as you can see by the front page of the FT here. Greek markets hit by collapse in talks. The euro fell from 112.60 to 112.00 overnight, although it's bounced a little bit. DAX and other major international indices have fallen sharply, and Bunds have seen a flight to quality as investors shun Greek debt and, to a lesser extent, peripheral Eurozone debt. So, dollar up, bonds and equities down. The Greek tragedy enters its final 2 weeks. Let's have a look at some numbers coming out this week. As I said, sort of dominated by central banks, really, and it's FOMC this week. But before we get on to FOMC, we've got Mario Draghi, the president of the ECB, talking on Monday afternoon. Obviously, that will always be listened to carefully. Any central banker is listened to quite carefully. We have the UK CPI out at 9:30 Tuesday morning, which obviously will have its effect on gilts, sterling crosses, and obviously UK equities. It used to be called an inflation date, but last month we got the first deflation number for 50 odd years. Mark Carney, the governor of the Bank of England, forecasted low inflation in the coming months, but expected a gradual pickup towards the of 2015. Tomorrow's CPI number is expected to show a slight pickup, as Mr. Carney had suggested. I think maybe oil continuing its modest recovery is probably helping that, but we're forecasting, and the consensus is plus 0.1%, which is inflation and not deflation. We then have the ZEW economic sentiment number, and an index of German institutional investors and analysts, as it says here on Forex Factory. Numbers quite a bit softer than previous month, and I think it's probably down to the sort of really the economic outlook in the Eurozone, especially with the Greek situation remaining unresolved, certainly having its effect, that's for sure. There are a number of releases this week, but I'll just focus on the main one of the week, really, which is the FOMC meeting, the Federal Open Market Committee, the rate-setting committee of the Federal Reserve, the U.S. Central Bank. June was always the meeting at the beginning of the year that we would see the first rate rise in the U.S. for, 6 years? Well, guess what? No rate rise. The consensus is for the Fed to stand on hold, keeping rates at the same level of 0.25%. But as always, it's the narrative as much as anything else. So what message that the Fed actually sends the market in the press conference and statement afterwards is key. So 7:30 in the evening, I should say, on Wednesday is when we'll have that press conference, which could really move those markets. Hopefully not too many of us will be trading at that time. One other central bank, in fact a couple of other central banks. We have the Swiss National Bank have their monthly meeting. I gather the Swiss National Bank president noted that the franc was still overvalued at the previous meeting. There's room for even lower rates in the future. However, they're expected to keep rates at a level of negative 0.75%. Same thing with the Bank of Japan in terms of monetary policy. That's not out until Friday, but we're expecting no change in rates. If any of the comments from Kuroda suggest they're definitely on wait and see, Kuroda suggesting that the yen perhaps was a little bit oversold there, which was one of the reasons why it snapped back, of course. So there we go, have it. An important week, certainly midweek with the FOMC. So keep those pencils sharpened. Thank you very much for listening, and bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.